Michael Burry warning revealed. Prepare for the collapse, insider news leaked. The 13F, what to most people seems like a boring SEC form, is one of the most important documents in finance. A quarterly report is required to be filed by all institutional managers with over $100 million in assets under management. This document discloses equity holdings and provides us, the common man, insight into what the smart money is doing in the market. The most recent round of 13Fs showcased some truly bizarre moves by Scion Asset Management CEO Michael Big Short Burry. His bets on hyperinflation, technology, and electric cars were unveiled, and everyone has questions whose answers may reveal the troubling future of the United States economy. Today we're going to talk all about Michael Burry's shocking secret positions on hyperinflation, tech, and electric cars. So watch the video till the end, because today's video is going to be the bomb. Welcome to Michael Burry Secrets, your daily dose of Michael Burry. If you're interested in everything around Burry, this is the place for you. Subscribe if you want to stay updated with all the Michael Burry secrets, predictions, and stay one step ahead in the financial world. Watch the video till the end, and make sure to hit the like button if you want to be a millionaire within the next 3 years. Don't forget to enable all notifications to join our weekly cash giveaway pinned in the comments. Now let's get to our topic. Dr. Michael Burry, a man shrouded in mystery following his sudden disappearance from Twitter in mid-March. Before deleting his profile, Burry had been shouting warning after warning about the rampant speculation and excessive valuations in the financial markets. Most notably in February, he had stated that the stock market was, quote, dancing on a knife's edge, and slammed stock trading app Robinhood as a dangerous casino. But it was not until his dire warnings about upcoming hyperinflation, comparing the United States with the Weimar Republic, that officials really began to grow concerned. According to various reports, Burry was visited by SEC officials who supposedly warned him about his Twitter behavior and how it could be influencing the markets. These last tweets before the profile was deleted are very, very interesting and open a portal into the mind of a man well known to predict severe market downfalls. Michael Burry expects the post-pandemic economic recovery and another round of stimulus to drive up prices, and doesn't see Bitcoin or gold as guaranteed havens for investors. Prepare for #inflation, the investor said in a now-deleted tweet on Thursday night. Reopening and stimulus on the way. Pre-COVID, it took $3 debt to create $1 GDP, and it's worse now. In an inflationary crisis, governments will move to squash competitors in the currency arena. BTC, #gold. Burry's shot to fame after his billion-dollar bet against the U.S. housing market was chronicled in the book and movie The Big Short. He also helped lay the groundwork for GameStop stock to skyrocket earlier this year when he invested in the video game retailer back in 2019. The Scion Asset Management chief underscored the rising threat of inflation in a flurry of follow-up tweets. He quoted at length from Dying of Money, Lessons of the Great German and American Inflations, a book by Jens O. Parson, to drive his message home. Burry highlighted passages from the book about the recurrence of inflation throughout history, how it's usually preceded by an economic boom and a spike in overnight fortunes, and how it leads to soaring crime, surging living costs, and poverty. The investor compared Germany's path to hyperinflation in the 1920s to America's current trajectory. Germany, the US, started by not paying adequately for its war, on COVID and the GFC fallout, of the sacrifices of its people, taxes, but covered its deficits with war loans, treasuries, and issues of new paper Reichsmarks, dollars. #doomed to repeat, Burry tweeted. History is not useless, he said in another tweet. This text explores the 1970s American inflation, which is more relevant today than one might think. Burry also drew parallels between the market mania in Germany before inflation took off and the Reddit-fueled buying of meme stocks this year that led Robinhood to temporarily halt purchases of certain stocks. Before the German hyperinflation in the 1920s, everyone from the elevator operator up was playing the market, and volumes became such that the financial industry could not keep up with the paperwork, and the bourse was obliged to close. Sound familiar? #Robinhood down, he tweeted. Burry's latest comments echo his warnings of a massive market bubble and his description of the GameStop frenzy as unnatural, insane, and dangerous. Former U.S. President Ronald Reagan once said, "Inflation is as violent as a mugger, as frightening as an armed robber, and as deadly as a hitman." After a challenging period of high inflation throughout the 1970s and 1980s, Reagan's words cut deep for a generation that had seen skyrocketing petrol prices and the cost of living rising by over 13% in the year he came to office. For well over a decade, the issue of inflation has generally slumbered throughout much of the Western world, as consumer price indices generally trended down and interest rates continued to be cut. In April 2019, the magazine Bloomberg Businessweek went as far as asking, "Is inflation dead?" and speculated on some of the potential downsides. Yet 2.5 years and a pandemic later, the question is no longer, "Is inflation dead?" Instead, it's, "Could we see hyperinflation?" Last week, Twitter CEO Jack Dorsey made headlines around the world by stating on Twitter that hyperinflation is going to change everything. It's happening. As an incredibly well-connected tech mogul with a net worth of more than $14 billion, Dorsey's warnings prompted a great deal of concern from some quarters that the Twitter CEO's prediction could be right. Dorsey isn't the first high-profile individual to raise the alarm on hyperinflation potentially becoming a major issue. In February, hedge fund manager Michael Burry compared the fiscal and economic situation in the United States with those of Weimar Germany in the early 1920s. Burry became a household name in the world of finance in 2015, after the film The Big Short immortalized his role in predicting the American subprime mortgage crisis that would ultimately lead to the global financial crisis. Through a long list of comparisons with early 1920s Germany, Burry shared multiple examples of how the United States was on a similar path of financial market and governmental spending excess. From the participation of everyday people in pursuit of easy money in financial markets, to a government spending-induced boom preventing business failures, Burry shared example after example of the similarities. He pointed out that the current high valuations in global asset prices were very similar to those experienced in 1920s Germany before hyperinflation took hold. While the likes of Burry and Dorsey are raising the alarm about the prospect of hyperinflation, the likelihood of a textbook case actually happening is at most minimal. The chances of your weekly grocery bill rising by 50% in a single month are currently highly unlikely, at least in Australia. But that doesn't mean that high inflation, like the levels last seen in the 1970s and early 1980s, are out of the question. With the forces of deglobalization and high energy prices to potentially contribute to the inflationary impulse for quite a while to come, a high inflation future is a scenario that cannot be ruled out. Ultimately, the direction of inflation may be the defining economic and political question of this decade, potentially creating a butterfly effect of all sorts of consequences that we haven't even begun to consider. Well, that's it for today's video, guys. Also, we would like to mention that this is not a channel intended specifically to provide financial advice, and we do not ask you to invest in any company. This is merely a channel directed towards bringing educational content to your doorsteps. With that in mind, before you invest in anything, we recommend you do thorough, wide-spectrum research on the topic. And make sure to subscribe and give us a thumbs up. See you next time on Michael Burry Secrets. Bye!